Good afternoon, ladies and gentlemen. A warm welcome to Hatna Towers. Good to see you all, and thank you for being here. And in addition to those who report on us, many thanks for covering us right through the year and for your support. In particular, the ongoing campaign, the new brand campaign, which we are covering these days, which is banking beyond transactions, which epitomizes what HNB has been for the last 127 years, is something that we really plan to bring through you and showcase to the country following our New World Banking campaign that we had last year, where we showed that in terms of technology, whether it was new electronic products, new channels, or all the processors and the automation and the new IT systems that we were developing, that we were second to none in the industry in terms of providing leadership to technology banking and digital banking. And now we move on to the richness of our heritage, our history, our legacy, which is all about building relationships. The campaign was launched leveraging our housing proposition. Now we see it has moved into the second phase, where we are bringing in technology. And then you will see the stories of microfinance, SME, corporate banking unfolding in the weeks to come, which is all about HNB and what it's going to be over the coming years. So once again, thanks very much for your support. It's been a very interesting and rewarding year for the Hatton National Bank in 2015. So I'm very pleased to see all of you and mention that both the board, the management, and the entire team is pleased with its performance this year, and we are looking forward to, notwithstanding some of the macro level concerns that we might have, we are looking to do our part. We are looking to drive our strategy within the permutations of the economy and do what we need to do to continue to produce good results, as we have been doing for the last so many years. I'll look at some of the numbers and the details of it as we go on. Probably do this presentation breaking it into three areas, and then my colleagues will join me to take on a Q&A session with you all. So very quickly on the business model, which is very familiar to most of you all, HNB represents possibly the largest banking group in Sri Lanka, unlike the other banks which are to some extent standalone, if at all having one or two companies attached to it. So you have our the stock broking arm, the primary dealership, the venture capital arm, Lanka Ventures, which is listed, and then our partnership with Guardian in the asset management space. Our latest acquisition, Prime Grameen, which is now called HNB Grameen, is doing exceptionally well. We've just acquired it. It's only a little over 1 year, and we have already crossed $1 billion for this year, and we are likely to hit a 1.1 billion when we close in March this year, which is a phenomenal effort for the microfinance company with just 12 or 15 months since HNB took over. Again, products right across the group from the day a baby is born. You know, that's why you'll see HNB in most of the hospitals. Then you'll see us in the schools with our school centers, and then the teen products, the youth products, mass market products, which are probably more famous than some of the banks themselves in Sri Lanka. The brand names Pathum Vimana, the Shanti Housing Loan, HNB Leasing, now the future of the education loans, all trailblazing products that exist in the market and have driven significant volume this year. The professionals and executives continue to leverage our pay fast offering and the privilege banking. Private banking is predominantly driven through Green Path, the club franchise, and then shortly we are looking at a rebranding of our CRISIL segment, which is the level which is on par with all other banks' private banking offering, which would be launched this month, and you will see us opening many centers and driving that aspect. That would be a very interesting proposition when we bring it through, because it will bring a lot of services in addition to just doing deposits as well as loan products. We will be looking at valuation services, mortgages services, and various other value additions will be brought into this package. In addition to, we continue to be interested in our senior citizens and continue to offer very attractive products with attractive interest rates. The commercial banking space had a extremely good year. Like I said, at the grassroots levels, you have our Grameen operation. Moving on to another product which is world-renowned, the Gamipubudua microfinance product. Then our SME, which we have been doing for ages, I would say centuries. We created a new mid-market because we thought the growing SMEs need to be carefully nurtured and relationship managed, almost like the corporate banking portfolio is looked after. So in 2015, we created a mid-market segment and brought it under our corporate banking division, which in addition manages the large corporates and the multinationals. Last year, with the change in government, we didn't see any new transactions. So I think everybody knows HNB would not have participated in any new government transactions in 2015, but we hear of new projects that are taking on, and if the right opportunities persist, which are of benefit to the country, we would see in which way we could make a meaningful contribution. Coverage right across the country, 10 regions, 249 branches, leadership in merchant acquiring with our 12,000 POS machines, growing number of electronic banking users who now continue to use our ATMs, our internet banking, our mobile offering, and then the transaction migration from the counters is taking place at a very rapid and successful pace, which pleases us all and then helps us move more of our processing staff and admin staff into sales roles, which is something that the whole organization enjoys at present. So the real 24/7, 365-day banking is now taking place, and we are really giving life to our New World of Banking campaign, which we let's say ran last year. So complementing all the internet banking, mobile banking, and the ATMs that we have also introduced a significant amount of cash deposit machines in addition to kiosks, and the thrust here will continue in having a balanced growth in cash withdrawal, deposit, and kiosk machines. And then as soon as we are ready, we will be going into digital branches as well, and you would probably see faceless banking taking place in HNB very soon. In terms of strategic direction, the 7 pillars have kind of come to stay. You all are all familiar with the customer service proposition at the apex. A strong sales culture emerging in the network, which has then supported the increase in driving a profitable balance sheet and driving fee. And then you have right at the bottom the the strength of the organization, which is its staff, the competence there, the technical capability, and then the various let's say optimization strategies and IT that we bring in to strengthen our proposition. In addition to being, I think we would claim leadership in the way we govern, in the way we are transparent and compliant when it comes to regulatory requirements. The whole strategy revolves around our people, process, and technology strategy. In people, we have done a lot of work in terms of headcount has not increased. It has stayed flat to the best part for the last 10-12 years, but over the last 3 years, we have almost reduced 400 staff, and that has been significant, and that's really the technology taking over and some of the admin and operational roles becoming redundant and those staff being moved to the front end. A very state-of-the-art learning management system introduced in 2015, where we will bring in lots of modular training, sales programs, service programs, technical programs, soft skill development programs, where staff at their own leisure, own time and let's say pace could complete these courses in office, outside office, at the weekends. All they need to do is just get connected. So these are the facilities that we would provide. Over the last 2-3 years, we have been developing a very strong leadership team at the bank, with succession being given a lot of prominence, and that's why today you see that the leadership team is very strong. Each vertical is headed by let's say industry leaders, probably the best in the industry in that particular space, whether you speak of retail banking, corporate banking, processing, IT, HR, operations, risk, audit. All the areas are very, very well managed. They are very strong and have the right people in place. In addition, in terms of succession, we have got multiple development programs going in at different levels. So at the highest level, you have a corporate management development program, you have your Catalyst program, your Acumen program, your Aspire 2, Unleash programs, which continue to develop hundreds of executives into senior management roles, aspiring to take this bank forward by looking to take up a new and bigger challenges. We also, in order to motivate our younger staff into sales and bring in that sales culture, we have introduced significant amount of rewards. We believe while the marketing communications will continue with the newspapers, the televisions and the radios, that we believe a lot of ground activation and our own staff participating and becoming more aggressive with their sales will have a lot of value, and we are seeing that value today in practice, and it's something that we will continue to invest in training and then sales targets, monitoring, and making sure we incentivize those who are those high performers. This is a very important area and an area where we have achieved a lot of success over the last 3 years. We have had this country operations department, centralized operations department over the last 10 years. But what is interesting about this department is every year something new is taken on, from account opening to foreign currency account opening, checkbooks, stock checks, balance confirmations, took over credit card operations recently, issuing PINs. Trade operations were centralized recently. So a lot of activity is being taken on. So what happens really is you have a few people who are skilled, who do the job better, relieving lots of staff in the branches to focus more on sales and services. Using the experience and the success that we achieved in centralized operations, we also then ventured into a center of excellence. And here the initial objective was to take over personal credit which is written all across the country in 250 branches by about 500 to 750 executives was taken over, and we run a very tight ship of about 50-60 officers in Colombo who process speedily, high level of accuracy, and disperse facilities at a rapid pace. This has really helped us, and this initiative with the centralized operations COE will continue as a major thrust in driving retail banking at HNB. Various automation initiatives continue, the outsourcing initiative continues, but at a very strategic macro level, the process improvements in terms of adopting a matrix structure where you have the two-tier sales structure at the highest level, and then you have a supporting structure which supports the operations and the administration. It is applicable at the branch level, regional level, and also then it's implemented even at a head office level. So just to put it into context, you have me running the business verticals with corporate credit and transaction banking and retail banking. You have Dilshan, who's my deputy, who's Chief Operating Officer, who enables the front line by managing all the support services that enable the front line, whether it's risk, audit, let's say compliance, operations, IT, finance, and these functions. It works well and then gets extended into the region where the regional head focuses on business while the deputy focuses on more on operations, and goes further into the branches where the branch head focuses on sales while the deputy focuses on operations. We see a lot of value in having more focused job descriptions, having less to be done by an individual and done better and in a more focused manner. Unlike previously, when a branch manager was inundated with a whole heap of activities that was you needed to perform in managing a branch, the pressure was enormous and what you could achieve was limited, and you were prone to also make mistakes in covering that, in doing that kind of volume. Technology equally has been an important initiative and has led the change that has taken place at HNB. The core banking systems continue to be developed. The Finacle system, which Infosys implemented in the late 2000s for us, it's probably closer to time to upgrade. It's likely that we'll undertake a study this year and look at an upgrade early next year, which will again enhance our capability. And complementing that, you have your state-of-the-art Smart Vista ATM solution given to us by BPC, which continues to give us an edge over the competition in terms of our capability on product development and the services that could be afforded on our ATM switch. In addition, the cards, the leasing systems all have been upgraded. The new channels are having the latest technologies in mobile banking, the call centers, the electronic data interchange for corporate banking. Momo continues to win awards both locally and overseas. In terms of new product, we are right now going through a massive project in trying to in upgrading with Infosys a new payments and cash management solution, a new supply finance, a new distributor finance system, which also then brings in trade capability, whilst in parallel looking at enhancing, upgrading our treasury system as well. Whilst all the channels and the frontline systems have been evolving, we have also not compromised or hesitated to invest in important compliance, regulatory and back-end systems that give us the comfort to run our business. So significant investment in anti-money laundering systems, in asset and liability management, fund transfer pricing, upgrade to SWIFT. We are now working with Commercial Bank jointly to develop a state-of-the-art IFRS system which will bring in significant automation to some of the manual calculations we do on Excel, etc. So hopefully the level of accuracy of the reporting and the impairments, the calculations, all that will improve, make it easier, as well as save us time when we are ready to go live in the next few months. So the investment over the last 3 years in IT has been approximately 1.8 to 2 billion. We have got plans to invest about a 2.5 billion in IT over the next 3 years in order to retain our leadership position all across the business verticals in within HNB. This is the digital journey that we have undertaken over the last 12-13 years, starting from telephone banking, retail banking. Somewhere in between we went and brought in Finacle around the 2008-9 period. Then the EDI came in, and then we moved on and to get to where we are today. And then there's a major project that we will implement this year which will give us the advantage in the corporate and SME space. A quick look at the financial performance. Net interest income continues to remain under pressure with margins eroding. I think all of us know PLR dropped by almost 200 basis points compared to 2014. Notwithstanding that drop, and then it was essentially a fixed deposit market in 2015 with depositors wanting a good return. There was pressure on margins, but still HNB was able to grow by almost 6%, primarily driven by a very aggressive balance sheet growth strategy, which for the first time HNB's loan book grew by over 100 billion and its deposit book grew by more than 100 billion. The loan book growth was spearheaded by corporate banking, who grew by 30%. So the growth was about 25% in terms of balance sheet growth. Was spearheaded by corporate banking, doing more than 30%. SME grew by more than 25%, and then you had leasing and personal installment loan portfolios grow by more than 60%. CASA grew, but the pace of the fixed deposits growing was far greater, resulting in having a marginal impact on our CASA ratio. Fees, commissions, other income continues to become an important part of our profit and loss, which then complements and then brings in the necessary bottom line in order to compensate for the narrowing interest margin. So the LC business, trade business, guarantee business, cards, new fees that we are earning from electronic banking, all these are important initiatives and drivers for us to increase our fee income over the coming years, which will then compensate for reducing margins on the interest side. We had a very good year in terms of, after 2 difficult years, with pawning, where we lost over 2 billion in each year, a total of more than 4 billion in 13 and 14. We finally had a reversal of some of those provisions and impairments that were made in 2015, because right now our pawning portfolio is well priced. At the time we took those hits, we had a portfolio nearing 50 billion, almost 16.5% of our portfolio. Today our pawning portfolio is less than 3%, yeah, or 3% or a little under, and I don't see it reaching the 3% in the foreseeable future. It's not because we are not doing pawning. We do pawning where it matters, not necessarily in 250 branches, but we really don't see it taking off the way it did previously. In addition, the margins on it is less attractive than what it was 3 to 5 years back. Operating expenses, again, another very successful year in managing costs. So contained at 3.9%. This is even though staff expenses increased by 7 on the against the backdrop of it being a collective agreement year where junior executive and banking assistant salaries increased by more than 30%. This was mainly contained through other operating expenses, which were controlled at just a 1% increase. So we continue to work efficiently through our change management divisions, our business process re-engineering divisions, our cost optimization committees in order to drive significant value and contain costs. And with those efficiencies and with those process enhancement, what we also derive mostly is our valuable resources being then redeployed into sales area, which then propels the sales part, which is what you see in our balance sheet growth this year. So we've paid more VAT and tax on account of a higher profit this year. The income tax expense difference is disproportionate because there were certain value items last year, particularly on the Grameen acquisition, etc. But very pleased to record the 10.5 billion profit after tax in what we thought was a challenging year that was dominated less on the economic side but more on the political side and the social aspects of how Sri Lanka was going to move forward. Group performance slightly better in terms of margins that is dominated by the Grameen margins in terms of net interest income. Fees, you have the gross GWP of the insurance business. Operating expenses slightly higher because of the claims ratios coming from the general insurance business of HNBs, where we had certain higher claims with our vehicle leases and the insurance that we had done there, in addition to new costs coming from Grameen in terms of the 1,000 staff that they manage there. But overall, again, the group performance has been good but dominated by HNB's performance. A couple of quick slides on some of the KPIs that we monitor. ROE was around 16.6%. ROA at 1.6 continues to be around where we want to be, in where margins are tightening. We find that this is achieving this was a good achievement for HNB. Net interest margins, you can see decline from the historical HNB margins of 6.25 plus, how it has declined to a 4.5. However, you'll see that our margins, the group margins, are higher simply because of HNB Grameen. The bank margins significantly reducing, however, still remains higher than the industry. So I said fee income is important. We have done very well on fees over the last 5 years. You'll see that there has been a compound growth rate in excess of 20% for both the bank and the group. The drivers are the trade finance business, the guarantee business we do, cards, the leadership in acquiring, and we're catching up fast on our issuing business as well. In addition, with our thrust into digital banking, it opens up new avenues for generation of fees. An important area, like I said earlier, to compensate for the depleting margins. Equally, driving operational efficiency and bringing down what used to be high cost income ratios of HNB previously, which were in the 60s and high 50s for a significant amount of time. Today we are very pleased to record levels of 45%, and we know that it will continue to reduce as we continue to work on our BPR strategies and our cost optimization strategies. Advances have grown over the last so many years. You can see with the pawning declining how the corporate portfolio has started to grow a little beyond what was traditionally a 60-40 retail corporate allocation that we had. We were predominantly a retail bank, but I'm sure as markets open up, consumer finance drives, SME opportunities come through, and the microfinance business grows, like we read the papers yesterday or day before, where central bank is looking to do a lot of regional credit, and with corporates more or less going into capital markets and looking at outside borrowing, we believe the opportunities will be greater for HNB to leverage its branches and continue with its SME and its microfinance thrust. Asset quality, a lot of work is done in terms of recoveries at head office in the regions and in the branches. Multiple other strategies are in place, both in-house, outsourced strategies, in order to deliver the right messages to the network as well as to our clients, that we only do the good business that we need to do. That's why you have seen NPAs, which were at high single digits at HNB, now over the last 5 years reducing year on year to record the lowest that we have seen it in recent times at 2.43, and we will continue to drive it down further. I suppose this is my last graph that I am showing. I kept it for the end because I think it's the most important one going forward in terms of funding. It's not just for HNB, I think it's an equally important initiative for the country as well. So the success of how you employ your funds and into which areas of your balance sheet, whether it's corporate, SME, retail, a lot would depend on your source of funds and the structure of it, the component, how much of CASA can you bring in, how expensive are the FDs, how much of foreign currency funding are you bringing in, are you swapping them into rupees, how much of capability is there to lend in dollars itself, how much do we plan to lend overseas and in the region. We have done transactions almost close to $100 million last year, with at least 70-80 million being dispersed, and then the remaining to be dispersed this year, but the transactions are already on board. We will look at more transactions selectively, how at the right margins. However, we foresee this year as being an important year where we already have a pipeline which we would need to support locally as well. So a lot of it depends on how much we are able to drive our CASA deposits and our deposit mobilization in general, which will then create that capability on the lending side. Again, a quick look at the DuPont. I have already mentioned the declining margins. You can see how other income has come in to compensate. Still, overall, there is a drop of about 60 basis points. But how we have made up for it is through better management of our operating costs and gaining a 40 basis points advantage there. Huge advantage on the provisions, a 30 basis points gain there. Taxation has cost us a little more, but overall we have managed to still hit the 1.6 through efficient cost management and recoveries to compensate for the narrowing margins on the top end. So return on equity has also increased as a consequence to the strategies we have adopted. Some of the other KPIs in terms of asset growth almost hitting 27%, loan growth 26%, all of these above the industry average. Deposit growth of 26%, cost income at 46, NPA ratios, ROA, ROE. So overall, in all areas, you would see that HNB has outperformed the industry, and we look forward to, and even if we compare with our closest peer group, we are very, very pleased that this year we find on most of these KPIs we rank higher than them in at least potentially 6 out of the 8 KPIs that we look at, which is probably a first for us in a long time. And that's the kind of dashboard that's going to the board tomorrow, and when they see it tomorrow at our meeting as well as at the Friday's board meeting, they're going to probably be a little surprised, but then be happy at the end. So the strategies to continue our digital trust, selectively look at brick and mortar, continuing to drive BPR and other process improvements, managing our costs tightly, driving our staff optimally and upskilling them to the level of managing the future banking requirements, and then based on that, leveraging the segments that we have cutting across Sri Lanka, the length and breadth of Sri Lanka, with very capable relationship management and segment teams, driving the cross-sell, enhancing wallet is going to give a lot of value to HNB going forward. And complementing that, you would see a little bit of international activity that will come in, which will give us the required margins. We continue to provide good returns to our shareholders. So even in a year where the market was down, the HNB has provided above 12% return on its voting shares, above 21% return on its non-voting share. Dividend payout continues to be in line with market, and we continue to win the awards that we are accustomed to win in retail banking, in marketing, in HR, in process improvements, across the length and breadth of all departments. Continue to win in green banking, sustainability. A lot of the projects that we have taken on board, we seem to be winning awards, and which is a good thing for the vertical heads who take up responsibility and drive their businesses. Ladies and gentlemen, if I can stop there and invite my colleagues to the head table and take on any questions that you might have. Thank you.